In this video, we are going to reveal the top 20 stocks that pay a dividend every single month. Before that, please like this video and subscribe to our channel for regular updates. Let's get started. Monthly dividend stocks are becoming an increasingly popular option for people looking to increase their regular income with investment income. All 20 of the stocks on our list pay monthly dividends, and while there is risk involved with them as there is with all investments, they might be worth considering for portfolios that place a strong emphasis on income. Number 20. Dynex Capital. Ticker DX. Current yield of 12.2%. Dynex is a real estate investment trust or REIT that uses borrowed money to invest in mortgage loans and securities. Although its portfolio is a little more diverse, over 90% is invested in agency residential mortgage-backed securities and bonds made out of the mortgages of ordinary Americans. Dynex also has exposure to commercial mortgage-backed securities and a small allocation to non-agency securities. It's important to remember that the mortgage rate sector was heavily affected by the pandemic bear market when the world first went under lockdown. At the time, it wasn't immediately clear whether millions of Americans would be able to pay their mortgages. This led investors to sell first and ask questions later. In the bloodbath that followed, many mortgage REITs took catastrophic losses and some failed altogether. Dynex is one of the survivors, and frankly, any mortgage REIT that survived the upheaval of 2020 is one that can likely survive the apocalypse. Number 19. Ellington Financial. Ticker EFC. Current yield of 13.3%. Ellington Financial acquires and manages mortgage, consumer, corporate, and other related financial assets in the United States. The company acquires and manages residential mortgage-backed securities, backed by prime jumbo, manufactured housing, and subprime residential mortgage loans. The company also provides collateralized loan obligations, mortgage-related and non-mortgage-related derivatives, equity investments, mortgage originators, and other strategic investments. Number 18. SLR Investment Group. Ticker SLRC. Current yield 13%. SLR uses its direct origination platform to source proprietary investment opportunities and typically applies a private equity-style approach to its comprehensive credit underwriting process, including in-depth due diligence and, when applicable, active structuring of investment terms. Since its inception, the SLR platform has invested over $16 billion in more than 1,500 different portfolio companies with 250-plus private equity sponsors. Number 17. Prospect Capital Corporation. Ticker PSEC. Current yield of 9.4%. Prospect Capital Corporation is a business development company that makes debt and equity investments in U.S. middle-market companies. It does so across many industries and aims to provide stable returns to investors. Its portfolio includes $7.7 billion worth of assets and declared more than $3.7 billion of dividends for investors. Number 16. AGNC Investment Corporation. Ticker AGNC. Current yield of 14.8%. AGNC Investment Corporation is a REIT that invests in residential mortgages. More specifically, it invests in mortgage-backed securities, although it invests on a leveraged basis. Its investments are mainly agency mortgage-backed securities, which means they are backed by government-sponsored enterprises or government agencies. This can help reduce risk for investors. Number 15. Main Street Capital Corporation. Ticker MAIN. Current yield of 6.8%. Main Street Capital Corporation is a private equity firm that invests in lower middle market companies with revenues between $10 million and $150 million. The company has been around since the mid-1990s. In that time, it has helped over 200 private companies grow. It focuses on companies with strong competitive advantages, stable positive cash flow, and seasoned management teams. Number 14. Stellus Capital Investment Corporation. Ticker SCM. Current yield of 8.2%. Stellus is one of the smallest stocks on this list at just less than $300 million in market value. However, its dividend is roughly 5 times that of the S&P 500. Stellus started to invest in lower middle market companies 18+ years ago, when only a handful of players existed. Since then, many firms have entered and left the market. Stellus remains focused on building long-lasting relationships and becoming a long-term partner to the businesses they support. Number 13, SL Green Realty Corporation. Ticker SLG. Current yield of 9%. One of the hardest hit stocks on this list, SLG may provide a massive upside opportunity for aggressive investors willing to buy and hold. As Manhattan's largest office landlord, this $2.5 billion real estate company holds interests in roughly 90 buildings totaling more than 38 million square feet of space. However, thanks to the remote work trend and a resulting reshuffle, SLG has been under pressure in 2022, with shares slumping about 50%. The rear-looking yield is quite generous based on current monthly dividends, but there's a chance that if SL Green doesn't see a recovery, its distributions will become unsustainable. Still, if you're confident in the long-term potential of New York and you think the current market mayhem is almost over, SLG offers a bargain buy. Number 12, PennantPark Floating Rate Capital. Ticker PFLT. Current yield of 10%. Miami-based PennantPark offers one of the most generous and consistent yields on Wall Street. It is a financial-oriented monthly dividend stock that operates as a business development company, or BDC. It makes debt and equity investments in pursuit of capital gains and then passes the profits on to shareholders via generous dividends. The company says it focuses on opportunities with defensible business models that will generate strong returns in any market. They include a chain of veterinary clinics, a government contractor, and healthcare software firms. These kinds of businesses should be resilient even if consumer spending continues to see short-term pressure. Number 11, EPR Properties. Ticker EPR. Current yield of 8.1%. EPR is a stock with a lot to offer. It's an entertainment-related REIT and it focuses on resorts, theaters, and other lifestyle properties. EPR had been a strong performer in 2022 before news that its second-largest tenant, cinema operator Regal Entertainment, was closing some money-losing locations in the wake of the bankruptcy of its parent company. But while that news isn't ideal, the market's reaction may have been a bit too severe, as Regal accounts for less than 15% of EPR's revenue. It's unlikely that every single location will close, and EPR may find a competing theater chain to take up the vacancies. Number 10, Realty Income Corp. Ticker O. Current yield of 4.8%. Realty Income is probably one of the most popular stocks with investors focused on creating solid monthly income streams. The whole identity of the company is based on the fact that it delivers a monthly dividend and has been doing so consistently since its incorporation. Realty Income owns commercial real estate that at least is exclusively to Grade A tenants on long-term leases of typically 10 years or more. Realty Income makes the grade for our list of the best monthly income dividend stocks because the company's portfolio is in great shape, owning over 11,400 commercial properties with a 98.9% occupancy rate and 1,100 tenants operating in 72 separate industries. Wisted delivers a yield at the lower end of our selection. Realty Income is a solid player that makes sense in any portfolio. Number 9, STAG Industrial Incorporated. Ticker STAG. Current yield of 4.6%. In with the theme of REITs, this is another monthly dividend-paying stock that is widely considered a good inflation hedge, making its inclusion in this list a no-brainer. STAG Industrial owns industrial logistics and warehouse real estate. These niches have performed particularly in recent years, well as the retail economy continues to migrate more and more out of brick-and-mortar shops and into the online e-commerce space. With a current market cap of $5.6 billion, growth prospects for STAG look pretty good and the forward dividend yield is stable. Number 8, Green Realty Corporation. Ticker ADC. Current yield 4.1%. Agree is a publicly traded real estate investment trust, or REIT. If you're unfamiliar, this special class of corporation is granted preferential tax treatment to facilitate its capital-intensive operations. In exchange, all REITs must deliver 90% of taxable income back to shareholders. Agree is primarily engaged in net leased retail properties, meaning tenants pay for the upkeep and taxes while Agree just cashes the rent checks. Its diverse portfolio spans 45 states and comprises of over 21 million square feet of gross leasable property. Tenants include Walmart and Home Depot. This makes for a stable operation that can support regular monthly dividend payments to shareholders. Number 7, APLE Hospitality REIT. Ticker APLE. Current yield of 4.4%. APLE Hospitality has a diverse portfolio of upscale hotel properties that span almost 90 different markets in 34 states. These properties are branded under the Marriott, Hilton, and Hyatt nameplates and include locations such as Boca Raton, San Diego, and New York City. With pent-up demand for travel in the wake of the pandemic, APLE has seen strong revenue lately, and its stock has responded in kind. APLE Hospitality REIT shares are down just under 5% year-to-date, which is pretty darn good considering the S&P 500 is down about 18% in the same period. Number 6. Cross Timbers Royalty Trust. Ticker CRT. Current yield of 9.1%. Cross Timbers Royalty Trust is the smallest stock on this list at just under $150 million in market capitalization. However, it is a monthly dividend stock in the energy space that's worth a look. It has a partnership model that slowly brings its energy reserves to market and delivers the majority of the profit from those sales right back to shareholders. At the end of last year, CRT boasted 2.5 million barrels of oil and 14.3 billion cubic feet of natural gas underground, so there are ample resources left to ensure continued payouts for a while. Energy prices remain elevated in 2022, and chances of this small cap stock will continue to provide big dividends in the near term. Number 5. Gladstone Capital Corporation. Ticker GLAD. Current yield of 7.8%. Gladstone operates much like a venture capital fund or private equity firm, searching out profitable investments in other businesses and passing a piece of the profits onto shareholders. It is primarily focused on small opportunities with investments ranging from $7 million to $30 million. Its portfolio includes positions in restaurants, manufacturers, technology enterprises, and others. The diversified debt portfolio helps to deliver consistent payouts every month that is roughly 5 times that of the typical S&P 500 stock. Number 4. Horizon Technology Finance. Ticker HRZN. Current yield of 9.1%. If you want the stability of a monthly dividend stock that delivers consistent income, but you also want the potential for growth, consider Horizon. As the name implies, this financial firm invests in high-tech and high-potential startups including medical technology and green energy, as well as traditional electronics and software. Though a rough environment has caused HRZN to drop about 20% this year, that's not as bad as some other tech-focused opportunities and is similar to the rest of Wall Street. The generous monthly dividend is a good hedge against further declines, however, and the growth-oriented business could set investors up for growth if and when bluer skies return to Wall Street. Number 3. LTC Properties. Ticker LTC. Current yield of 5.8%. LTC is a monthly dividend stock focused on one of the most stable businesses out there, senior housing and skilled nursing facilities. These are recession-proof expenses, as loved ones will continue to pay for aging family members' care in any economic environment, resulting in a highly reliable revenue stream for LTC. Thanks to this risk-off appeal, LTC stock has raised up more than 25% since January 1st, even as the rest of Wall Street has struggled in 2022. That's not including the generous dividend, which has continued to roll in and add a big monthly payday on top of the share price return. If you want a regular payday with stability, this stock may be worth a look. Number 2. Pembina Pipeline Corporation. Ticker PBA. Current yield of 5.5%. Pembina Pipeline is an oil and gas infrastructure and pipeline company that operates mainly in Western Canada. Pembina shares are up more than 20% year-to-date thanks to soaring oil and gas prices. The ongoing conflict between Russia and Ukraine suggests energy prices will likely remain elevated for the foreseeable future. Number 1. Broadmark Realty Capital. Ticker BRMK. Current yield of 9.6%. Broadmark Realty Capital is a REIT that provides financial services for real estate investors and developers. The company offers short-term first deed of trust loans backed by real estate. This is to fund acquisitions, renovations, or development of residential and commercial real estate. Broadmark has funded more than 1,200 real estate loans and deployed $3.8 billion in capital. The company has a $1.6 billion active diversified loan portfolio with exposure to properties in 20 U.S. states, The portfolio consists of 227 active loans with an average loan size of about $7 million. Which of these monthly dividend-paying stocks do you think are good investments? Let us know in the comment box below. Please remember to like this video and subscribe to the channel for regular updates on the top stocks. Happy investing and thanks for watching.